Let me tell you a little story. When I was first learning how to trade, I would read everything I could get my hands on about trading and investing. I'm talking from like 70-year-old obscure books about the markets all the way to like the modern dummies type trash. I'd even read the Financial Times from cover to cover religiously every single day. And I'm talking about the actual broadsheet newspaper, not the website, and magazines like Investor Chronicles, which are often so far behind the news that they're not even worth the paper they're written on. With all of that reading and the huge amounts of chart time that I was getting in, I really started to understand the tools that I was learning and really started to identify the patterns and characteristics in the market. I had a relatively conservative investment portfolio that was far outperforming the market. I had a risky part of a portfolio that had doubled my money a few times, and my active trading had just started to take off. I tell you what, I thought I was the absolute business. And we all know that's going to end badly, don't we? With anyone that's learned to trade and starts to accrue like huge amounts of chart time, you start to get an instinct of what's going to happen in the market. You build your experience and you get a real gut feel of what the market's going to do, even without having to do the actual analysis on the charts. And this is what happened with me. Like, I could look at the charts at a snapshot and get a good feeling of whether a trend's going to continue or reverse. And also at the start of the day, I had a pretty good idea of where the day was going to finish in terms of how the candles looked. So yeah, I started to get a little bit lazy and complacent. Like, I'd see the market falling heavily on one day when on the bigger picture, it was in a strong uptrend. And I think to myself, this has got to run out of steam sooner or later. The momentum can't carry on like this. And so I'd just jump into a trade, like a long trade against that trend. And sometimes it would just keep going against me. So the bigger picture was an upwards trend. On the smaller picture, it was in a downwards trend that I didn't think was right. I'd already entered, it's going against me. So I enter again. And really arrogantly, I'll be sitting there laughing to myself like, the market's just given me an even better entry. And I wouldn't be worried for 1 minute. But guys, let's put this into perspective for a second. Right, imagine you're in a casino for the evening and you're having a good time, you pick up your drink, you wander over to a roulette table, and as you stand there, you see it land on black after black after black after black. 15 times the roulette ball lands on black. So at that stage, if you were going to bet on what was going to happen next, would you think it's going to be red or black? And if you just said green zero, give yourself a slap around the head for being a smartass. Green zero doesn't exist in this scenario. Now, this situation did actually happen in 1913 in the Monte Carlo casino in Monaco. So all these gamblers around this table saw this streak of it landing on black every single time and incorrectly assumed that this streak was causing some sort of imbalance in the odds of the game, and therefore a red was due anytime soon. Now, these gamblers actually bet on red appearing next and next and next, and lost millions of francs at that one table, because in fact the streak continued and it landed on black 26 times in a row. Despite this streak of it landing on black, the truth is that the odds remained exactly the same. So after 15 spins, when I said to you, would you expect it to land on red or black? The answer is that the odds are exactly equal. This situation led to the term the Monte Carlo fallacy. This is the incorrect belief that just because something happened more often in a set period of time, it's therefore going to happen less often in the future, regardless of the exact odds. Okay, it's an incorrect belief. Now, I'm not going to go through the psychological reasons for this happening, but if you do have time to read about it, it's really, really interesting. Instead, in this video, I want to apply this concept or this fallacy to our trading. Now, the immediate quick win that we can get from this applying it to our trading is to say that we should never ever use a strategy like Martingale for our position sizing. I see a lot of people use this particularly for binary options, which is stupid already, but to actually keep doubling up your position or whatever to make sure that you get back what you've lost, that's stupid, because it's always with the assumption that you can't lose forever. But as we've seen, even on a roulette table where the odds are equal of red or black, you can get 26 times in a row, and that'll be a huge amount of money if you're using a martingale strategy. Let's go back to my trading story. Remember, I said that I'd double my position when the market was going in the wrong direction, and I'd be really smug and happy about it, thinking, the market's just gifted me a better entry point there and a chance to double into the trade. And I'd be happy about it because I was sure that the market was going to bounce back and go in the direction I expected it to. Well, many times the market would just keep going and going and going against me until boom, wiped out. You see this all the time when markets are trending really strongly and traders are sitting there saying to themselves, well, this must be due a correction soon, because of this incorrect belief that what goes up must come down and vice versa. But do a bit of research, go onto Google and tell me how many private investors and even professional traders like fund managers actually went bust because for over a decade they were trying to short Japanese government bonds. That trade seemed so appealing for a really long time and it sucked people in, and it was actually nicknamed the widowmaker because everyone that got sucked in during that time thinking it was a clear short opportunity just went bust. They got wiped out. Now we don't want to fall into that situation. We don't want to fall into this Monte Carlo fallacy where we assume that just because we've had 10 down days we're due to have an up day and jump into a trade based on that. This is why all those years ago I learnt my lesson and I stopped trading based on a hunch. Even when it's really tempting, I won't go down that route again. Instead, I developed rules about trading only when I see failure at the level. I mean, sure, I might look at a strong trend and say that that's been going on for too long and the market's severely overbought or oversold at this point in time, but I'm not going to just jump in a trade based on that assumption or that opinion that I have of the market. I've lost way too many sleepless nights over that, including what I think is one of the last times that I did that about 5 years ago, when for a 3-week period, my girlfriend at the time thought I was having a love affair with the euro. That's absolutely true as well. It was a love-hate relationship. Instead, I have my levels set out for my technical analysis, which you would have seen me do on a broad scale in my technical analysis videos on Sundays. But I'm not just going to trade these levels as soon as they're touched. No, especially not during a strong trend. That's like market suicide. Like, I see this all the time. Like traders trading support and resistance, for example, as soon as the market reaches that price level, rather than there being any sign of a struggle there. Like as soon as it touches it, boom, in a trade. I mean, you've just got to think about it logically. Would you rather enter here and the price moves through your entry before finally reversing back up and you lost that much of the reversal? Or would you rather wait until there's signs that the reversal's already happened and you've maybe lost the initial start of the reversal, but at least not had to wait for the market to come back to your entry point? You at least know that you're actually riding the reversal. I know which I'd rather have, because the other one triggers stop losses way too much. So I'm looking for signs that the market is slowing down at my significant levels. And not just that, but I also want to see signs that there's failure taking place. So for that I use my typical failure setups, which is a type 1 and a type 2 setup, and sometimes a type 3. If you've been watching this channel for a while, you know all about those. If you're not sure, then just join our Inner Circle mailing list. It's free and you'll get access to our 4-part video mini-series where we talk through all the basics, and that's one of the basics that we cover in that video mini-series. So get on that now, links in the description box. In addition to that though, I'm also looking for a structural change in the markets. This is particularly on the lower time frames than the time frame that I'm looking at for my main time frame. I'm seeing on the smaller time frames, are there changes taking place in the structure? Are the lower highs turning into higher highs? Are the lower lows turning into higher lows? Am I seeing a reversal taking place in the structure on the smaller time frames that's really showing that there is a struggle taking place and a change in momentum and the tides are changing that can translate onto the higher time frames that I'm actually trading myself? You know, also, is there a change in the volume or tick data at that point? Are the candles becoming more wicky that's showing like there's a momentum change? And on top of all of that, if you want to be on the extra safe side, has there actually been a candle going in the right direction for a reversal against the trend? You know, that's a clear sign that something's happened in the momentum and there's a shift in the direction that the market's going. It might not continue, but if you've got other factors on your side as well, that's a very clear indication that something has taken place there. Like, putting all of this into perspective, right now with the US equity markets, I think that they're hugely overbought and they've only been propped up as far as they've come because of market expansion. And I think there's going to be a big correction at some point. But right now, I'm not going to jump in with a short trade on those indices. Like, it'll just be suicide. Like I said, I'm going to wait for there to be a clear sign that the structure is changing in the market and that the tides are turning. That might mean that I lose some massive down days as a result of that, but it also means I'm not going to have those sleepless nights again and potentially having my stop losses triggered along the way. I want to look for clear signs that there's failure, that it's failing to reach new highs in the market and that it's not going to go any further, that it's peaked out, and then I'm going to find that nice downtrend and enjoy possibly one of the biggest trades of my year, which will probably come next year. I'm looking forward to that one. So basically, I don't want to fall for the Monte Carlo fallacy and be the idiot that's standing there thinking we've had 15 blacks, it's got to be red now, and 26 spins later realizing that you're broke. I want to be the guy that's waiting for the odds to really change in my favor and to know for certain that I'm actually backing a good trade at that point in time. You know, we want to wait for there to be failure in the markets before we enter to avoid having that failure in our bank accounts. Alright guys, thanks a lot for watching. I do hope that you're going to keep this concept in mind with your trading now and make sure you do things logically and don't jump into things all willy-nilly. If you like this video, please give us a thumbs up. We really appreciate those. And if you want more videos about learning to trade, hit that subscribe button and don't forget to press that little bell as well so that you get notifications of when we've got new videos coming out. It seems it's not enough just to subscribe anymore. You actually have to switch on the notifications too. If you want to learn more about our exclusive and unique method of trading, remember what I said earlier, sign up for our Inner Circle mailing list, it's free. And guys, if you have any comments, questions, suggestions, requests, leave them in the comments box below. And I look forward to seeing you in the next video very, very soon. Thanks a lot for watching, take care, I'll see you very soon. Bye bye.